Assalamualaikum, I'm Muhammad Afiq bin Abu Bakar. I'm here to share some insight about an interesting company we have studied called Censof Holding Berhad. It's a Malaysian tech company that's carving a niche in the finance industry by developing software that helps manage money matters more efficiently. Imagine having a tools that help government agency, banks, and various businesses keep their finance in check. That's what Censof Holdings offer. Their product like user-friendly accounting software and handy budget assistant are like the Swiss Army knife for financial tasks. They are all about embracing new tech trends. It's like they have a radar that picks up what's hot and what's not in the world of technology. And they use this to keep their software up to date. So whether it's the latest in cloud computing or blockchain, they are on it. But what's cool is that they don't just throw tech around. They really care about making things clear and working specifically for each customer needs. Think of it as tailor-made suit, but for financial software, it fits just right. As a student, I find it inspiring to see a company not just chase profit, but also commit to excellence and clear communication. It's a good reminder that doing business isn't just about selling, it's also about solving real-world problems and making sure everyone understands how the solution works. Why we choose Censof Holding Berhad for this assignment? First off, they are financially stable. Imagine a seesaw perfectly balanced with asset on one side and liability on the others. That's Censof. They are not weighed down by more debt than they can handle, which is a good sign for investor. Then they are positive return earning. This is like a saving account that keeps growing each year, showing that the company is making more money than it spends. Their debt management is pretty responsible too. They don't bite off more than they can chew, keeping a level of borrowing that's sensible compared to their equity, which is like the money put in by shareholders. Cash flow is a robust as well. It's like having a good sized water tank to ensure the farm doesn't go dry. Censof can cover its immediate bills without a sweat, keeping the business running smoothly. Their assets work hard too. High ROA and ROE mean every ringgit in asset and equity is being used efficiently to generate profit. They also have balanced mix of assets. Some are ready to convert into cash if needed, and others are invested for the long term. It's like having a diversified diet, which is a good for growth. That's a quick financial snapshot for Censof, showing a sign of a company with solid economic footing, something every investor and student of finance should appreciate.
Financial ratio analysis, liquidity ratios. The capacity to swiftly and affordably turn assets into cash is known as liquidity. The most beneficial application of liquidity ratios is in comparison analysis. Either an internal or external analysis may be done, for instance, employing numerous accounting periods that are reported using the same accounting procedures is a requirement for internal analysis pertaining to liquidity ratios. Analysis can monitor changes in the firm by the company comparing activities from prior periods to the current one. Activity efficiency ratios. One kind of financial indicator called an activity ratio shows how well a business is using the assets on its balance sheets to create cash and revenue. Activity ratios, also known as efficiency ratios, are frequently used by analysts to assess a company's inventory management practice, which are crucial to the smooth running and overall financial health of the business. Leverage ratios. A leverage ratio is any of a number of financial metrics that examine the amount of capital that is in the form of debt, which is loans, or evaluate a company's capacity to pay its debts. Because businesses rely on the combination of debt and equity to fund their operation, the leverage ratio category is crucial because it helps determine a company's ability to repay debts as it becomes due. Profitability ratios. Using information from a single point in time, profitable ratios are a class of financial metrics that are used to evaluate a company's capacity to generate profits over time in relation to its revenue, operation costs, balance sheet assets, or shareholders' equity. There are some of the most widely used metrics in the field of financial analysis. Ratios of profitability can provide insight into the health and financial performance of an organization. Profitability ratios can be used along the efficiency ratios, which consider how well a company uses its assets internally to generate income.
So let's take a look at the analysis that we have done for quick ratio. In the year 2018, the company has the amount of 0.29, and over the 5 years until 2022, it has steadily increased to 2.32, which is really good considering any company that has a ratio between 1 or higher is very good. So in other words, this means the liquid assets of Censof Berhad have increased. The second one is the current ratio. So the current ratio that started in 2018 is 0.88, and it has also steadily increased over the 5 years to 3.45 in the year 2022. So for current ratio, when the company has 1.2 to 2 ratio of current ratio, this is good. And also this means that the higher the current ratio, the more liquid the company is. So this means Censof have more than enough assets to cover its liabilities. Now, for inventory turnover ratio or ITO, we have seen that Censof started strongly in 2018 before slightly dropped and then regain its position of strength in 2022. So this means that Censof performed greatly after 2019 in generating its sales to increase its performance. Censof is replenishing cash and lowered the risks of becoming stuck with obsolete inventory. Next one is fixed asset turnover ratio or FATO. So in the year 2018, it started with 0.65 and decreased slightly before increasing in 2022 until 2020 until 2022, which is 2.39. So this means, by looking at the graph, we can tell that the higher the amount of ringgits in earnings for Censof, it means it has invested more in their fixed assets.
Debt ratio is a financial ratio that provides insight of a proportion of a company assets that are financed by debt. So as we can see from the graph, the debt ratio in 2022 is not as high compared to the first year of observation, which is 2018. So we can assume that Censof Holding is probably switched its strategy of using debts to fund its growth and operation. So this has lowered the risk of financial distress for events that are unpredictable, such as economic crisis. So let's move on to the next one. Next one is debt to equity ratio. Debt to equity ratio that measures the proportion of a company's financing that comes from debt compared to equity. So as we can see from the graph, at the year 2022, we can assume that Censof Holding had used more of its equity to finance its operations, thus making it less risky in the eyes of shareholders or investors. So In 2020, the company probably made loans to finance its operations, thus making the year's graph much higher than other years. And on assets, that measures how efficiently a company uses its assets to generate profit. So, as shown in graph above, for 3 consecutive years beginning in 2018 to 2022, Censof Holding had losses in their business. So, however, overall conditions of the company was not terrible, as the assets that they owned during that period was still more than the liabilities. So 2021 and 2022 were the years that the company had lowered the assets, and in return, the graph of return on assets during those years were increasing. So the second one is return on equity. Return on equity measures the probability of a company in relation to its shareholder equity. So as shown in the graph, from 2018 to 2022, the company struggled to generate their net profits. There was an increase in 2019 before dropping it again next year. In 2021 and 2022, Censof Holding managed to generate their profit, a massive increase in 2021 before slightly dropping again. The following year, the investors will look upon the number to compare Censof Holding with other companies. The graph was indicate inconsistency of the company's ability to generate profits using the shareholders' equity. Okay, that's
Recommendation. Based on the ratios that have been analyzed, it can be interpreted as a company is moderate in its performance. There are few recommendations for Censof Holding to improve its financial position. Firstly, we have identified the company's standpoint in terms of its liquidity. It was found that the current ratio is increasing from year 2018 to 2022. This is clearly as indicated of the company facing liquidity good. It shows how stable and financially healthy Censof Holding is. As for the quick ratio, it was also increasing by each year and indicates the company's ability to pay its debts. Secondly, the activity or efficiency ratios from the analysis shows that the account receivable turnover have a positive spike from the year 2018. However, it reduced by a small number by the year 2019. The next and the following years, the company become more sustained, and it shows that the good performance in sales. Next, the leverage financial ratio. The analysis shown that the debt ratio is decreasing year 2022 compared to 2018. Clearly, this is not good indication and company needs to start taking action. Companies with higher debt ratios are better off looking to equity financing to grow their operations. As for the debt to equity ratio, it shows 2020 more higher compared to other years. This indicates that the company is running more on debts to finance its daily business operation. Increasing sales revenue and hopefully profit is the most logical step a company can take to reduce its debts to capital ratio. This can accomplish by increasing price, increasing sale, or decreasing costs. Lastly, the profitable ratios, it was found that return of asset and return of equity having the negative percentage and keep on unstable by each year from 2018 to 2020. Both assets and equity are not utilized to generate positive return. The company need to revisit its business strategy and start to make change from the smallest to the highest or to biggest things possible to increase its profits.
As we conclude our analysis of Censof Holding Berhad financial performance, let's recap the key points that define its financial health. The company shows strong liquidity ratio, meaning it efficiently manages working capital, ensuring bills are paid and operation runs smoothly, much like a well-oiled machine. Censof has maintained conservative leverage with low debt to asset and debt to equity ratios. This prudent enhanced financial stability, acting as a buffer in turbulent economic seas. In 2020, a strategic debt reduction was implemented. significantly decreasing reliance on borrowed funds, reflecting a proactive approach to achieving financial autonomy. However, profitability has been fluctuation. ROA and ROE have varied with a significant upturn in 2020, signaling a responsive adjustment to financial strategies in challenging times. Yet, challenge arose in 2022 with a downturn in profitability ratio, presenting cautionary signal that warrant investor attention. The importance of true analysis is underscored here. A deep dive into financial report and management strategies, alongside broader industry factor, is essential for informed evaluation. Regular monitoring of financial ratio and market trend is also crucial, acting as a financial compass to navigate the ever-changing economic landscape. Lastly, the company adaptable strategies in response to market conditions are vital. It's their ability to pivot and evolve that will dictate future performance. In summary, Censof Holding Berhad has demonstrated financial resilience and adaptability, qualities that are compelling for potential investment consideration. They offer us real-world insight into the art of corporate financial management.